So do you feel like the bank has too much control over your money? Well, believe it or not, banks aren't the only way. So if you keep watching this video to the end, I'm going to show you alternatives, and alternatives that could be right for you to help you stop relying on banks once and for all. Because the banks, let me give you some news, they are not there to help you. Banks are there to make money for themselves. The more you rely on the bank, the more you're setting yourself up to fail. So let's dive in. So the first thing I would tell you to stop using the banks is use cash. Stop using credit cards. I hate debit cards. Stop using debit cards, because debit cards really just make you reliant on the bank. And not only that, now you're really pigeonholing yourself to only what money's in the bank. Now, I know that sounds cliche, but you know what? If you can use cash, that's great. Most people don't and can't, because in today's world, you almost need a credit card for every single thing. Let's talk about one other thing that you really need to do. And this is not going to be convenient, but it's going to certainly help you. What I want you to do is I want you to go to your bank. Yes, the local bank that I'm telling you to try to get away from. And the one that gives you the dumb suckers, just to make you feel like, hey, we gave you something dumb. Here's what I want you to do. When you go in there, I want you to open up a second checking account. That's right. If one wasn't enough, now I'm asking you to open a second one. And what this second bank account's going to be is it's going to be a segregated bank account. And we're going to use the segregated bank account in a very unique way, because what it's going to do is it's going to segregate your savings from your daily expenses. Okay, so whatever your expenses are, I want them separate from the amount of money you save. Because how many of you, be honest with yourself, how many of you are putting money in a checking or savings account, and after any period of time, there's still money in there? There's not, right? You always find a way to spend it. But if we segregate that, okay, if we take and you can use transfers, you can use bill pays if you want to use a different account, you just segregate that second banking account, and that's where your savings goes. And the amount you put into that should never, ever be less than 10%. So again, what is this first thing? It's number one, use cash if you can. But number two, open a segregated bank account. And that segregated bank account, make sure that you transfer or push at least 10% of your money into that. So that's going to be your savings, and we can use that for emergency funds and everything else. Number two, I want you to go out and I want you to try to find an interest rate on a savings account that's higher than what you're getting now. And I want you to peg different banks against one another. Now, this segregated account probably should be a savings account, but I want it to be a higher interest savings account. See, right now, the Fed has been raising interest rates, which means it's a matter of time and it's already happening. There's certain banks that are raising the amount they'll pay you on a savings account, and maybe even a checking, but specifically a savings account. So traditional savings accounts at banks, they don't offer very high interest rates. You got to look long and hard. The best way to do it is go on Instagram or go on Facebook and just ask, who's getting north of 3% on their savings account? And someone will probably comment or hit me up, and I'll tell you which banks are paying, because I got a direct feed on this. And that's going to be where we're going to keep that savings account money. Now, I don't think that's the final place this money should be, but just to get started, to kind of bridge this gap of your mindset being broken and relying on banks, we got to start thinking about these things. So I want you to find a high interest rate savings account. Number three, I want you to start getting used to paying things by using peer-to-peer payment apps. That's right, things like Venmo and PayPal. You've used them, you know what they are. Now, I want you to start getting used to using them, because you can only use the amount of money that you actually have. It's going to tie back to one of your bank accounts. And which bank account should this tie back to? Well, it depends. You know what? How I would do it is I would set one up for each. Maybe PayPal is associated with that high interest rate segregated savings account, and maybe the Venmo is for your regular bills, and we attach that to your regular checking account. So now what we're doing is we're trying to make sure that you don't spend more than what you actually make and more than you have. But this also pulls you away from having to use credit cards. Number four, I want you to consider some alternative investment options. I don't even want to call them investments, even alternative savings options. Instead of relying on your traditional investments like mutual funds and stocks and ETFs, let's consider some alternative places to put that money. And I want these alternative places to give you more control and potentially higher or more consistent fixed returns. So let's just talk about what a couple of these would be. And we're not going to go in depth in these because I got a video in my YouTube. So right now, let's just pause right now, click the subscribe button at the bottom and click that little bell. Actually, smash that bell so you're notified every time I put a new video up, because I'm going to go deep into each one of these sections we're talking about here, but this is just high level. So what are some alternative places? Well, how about specially designed and engineered whole life insurance? Well, that's right. No risk, right? It's a guaranteed account, but it's going to pay you a much higher interest rate, and it's going to pay you dividends every year. But not only that, if it's built properly, like the way we build them, it's going to provide you a tax-free environment where your money can be housed, and it's going to provide liquidity if done right. I know what you're thinking. You're thinking, wait a second, Chris, whole life and liquidity, the two don't make sense. If I put money in a whole life, I'm not going to have any money to take out for at least a couple of years. At least that's what your advisor or agent told you, right? But you obviously missed what I said. I said specially designed and engineered whole life. You see, the whole life that we designed for the infinite banking concept, that whole life gives you immediate access to your money immediately in the first 30 days. So if I can get you a guaranteed place to put your money, where it lives in a tax-free environment, where it provides all sorts of other benefits, but you also have liquidity of that money, earning a higher return, wouldn't that be a better choice than a savings account, than some of those other high-risk investment accounts? Hey, you can put money into the specially designed whole life and take it right back out and invest it into things like real estate, invest it into things like private funds, invest it into things like private lending. You see, there's all sorts of alternative places where you can make your money go to work for you that do not carry the same risks, that do not give up control like your traditional 401ks, your traditional IRAs, and your traditional stocks, mutual funds, and ETFs that sometimes, well, just aren't the right place to put it. And I would say right now, January of 2023, which is when I'm doing this video, this is not the time to put money in the stock market. The last thing, remember we were talking a little bit about credit cards. And when I said don't use credit cards, you said that's impossible. Everything in today's world is using credit cards. If I want to book a flight, I need a credit card. If I want to buy stuff on Amazon, I need a credit card. Let's try this. And I'm going to give you two alternatives. So this is the fifth one. Number one, let's try prepaid credit cards. I know this sounds silly. You get them for Christmas all the time, don't you? But let's just go out and let's buy prepaid credit cards that will cover you for 1 month or maybe 2 or 3 months. Figure out how much you spend every month by doing a budget. Then go out and get yourself a prepaid card. Now, when you get that prepaid credit card, that's going to give you the ability to do all those other things. You can link that to your Amazon account. You can link that to anything you want. You can keep putting money on this. You can keep putting new limits on this. You can do anything you want with these prepaid cards, but it's your money. It's not borrowing money. That would be the best thing, because that gets you away from using high interest rate credit cards that you may or may not pay off. But I know some of you like those credit cards. So let's go option number 2 for this fifth solution. Option number 2 is I'll let you use a regular credit card, but I want you to go to a company like Amex, where you have to pay it off every single month. And don't cheat. Some of the Amexes will allow you to carry a balance over. No, you don't want that. Whatever Amex you get or whatever credit card you get has to be paid off every single month. And the best way to control that is when you're talking to the credit card company, tell them you only want $1,000 or a $5,000 balance. Whatever your budget says you need, that's your balance. And darn it, every month you pay that thing off. No ifs, ands about it. You have to. So let's go back and recap. The first thing I said is to use cash. But I also said go out and open a segregated account. I don't care if it's a checking or savings account, but we're going to use that for the money that you want to save, no less than 10%. We want to get away from credit cards. Number 2, I mentioned opening a high yield savings account. There's all sorts of companies and banks that offer higher yield savings, and this is what you should use for that segregated account. So we want to try to get your money working at a little bit higher interest rate than what you're going to get with a traditional bank that doesn't want to pay you anything. Number 3, you know those peer-to-peer payment apps? That's right. I want you to try using those. Maybe Venmo for your regular bills, and then PayPal can be attached to that high interest rate savings account. And that could be used to pay bigger things that you save up for, emergency funds, things of that nature. I want you to try to use these peer-to-peer payment apps because it keeps you away from using somebody else's money, and it keeps you from being a slave to the credit cards. Number 4, We talked a little bit about alternative investment options and alternative savings options. Now, the first thing I said might not have really resonated because you were thinking, oh, I've heard nothing but bad things about whole life insurance. But I didn't say whole life. I said specially designed and engineered whole life, designed for the use with the infinite banking concept. And I said the reason for that is the higher interest rate, a tax-free environment, and the ability to have liquidity of your money. And then once the money is changed, that one change, and that's where your money goes first, into that specially designed whole life, then if you want, we can use that money to invest in things like real estate, private funds, crowdfunding, private lending, all sorts of places where your money can go and work at a higher interest rate than what it's going to earn sitting in any bank account for that matter. And the fifth thing might be a bit different for you, but it does work, is getting those prepaid credit cards or those prepaid debit cards. And then you have to do a budget for this because you got to know how much to preload on that credit card. And I would suggest doing that for every month. So every month you get a prepaid card for the amount of money you need for your expenses. And when that card runs out, well, you better figure out where you screwed up, because if your budget said that's what you needed, that's all you should have needed. And if it was an emergency that came up, well, that's why we did that segregated account. You see, we've covered all the different things that you need to do. So if something doesn't work on the fifth step here, it's because you screwed up something else. And I also gave you an out. Some of you just can't fathom using a prepaid credit card. So I said, all right, get a credit card. But that credit card better be one that requires you to pay the balance off every single month. And even if you don't pay it off, it doesn't allow you to carry the balance over. You must pay that credit card off. That will save you a ton of money in interest. So those are the 5 different things you can do to take back control of your money and start peeling away from needing and peeling away from relying on the banks. And if you liked this video, well then check this one out right here, how to get yourself out of debt right now. Thanks for joining me. We'll see you on the next one.